It has been observed that students do face issues, problems while solving questions related to cash flow from operational activities. They get confused. What are the items they do need to add, they need to deduct from profit to arrive at net profit before tax? What are the extraordinary items? What items they include in non-cash items or non-operating items? All these five components I have explained in this video to provide you a better clarity and the reasons why do we do that, and based on that I'm sure that you can solve the questions related to cash flow from operational activities very easily. So let's move to the video.
Now, let's start to understand cash from operating activities. Cash from operating activities. It includes to compute net profit before tax and extraordinary items. We can say it net profit before tax and extraordinary items. Then what we do, we adjust non-cash items. And third, we adjust non-operating activities. Fourth, we adjust change in working capital. And last, extraordinary items related to operational activities. Okay. Now, let's start with the first point, net profit before tax and extraordinary items, let's say. तो हमें क्वेश्चन में लेट्स से दिया हुआ है अंडर रिजर्व एंड सरप्लस इन बैलेंस शीट, जस्ट अ सेक, surplus balance from statement of profit and loss account of current year and previous year. Okay, फर्स्ट ऑफ ऑल ये हमेशा ध्यान रखिएगा कि हमें कैश फ्लो ड्यूरिंग द ईयर निकालना है. तो जो प्रीवियस बैलेंस है और जो करंट बैलेंस है, इन दोनों का डिफरेंस विल बी आर प्रॉफिट ड्यूरिंग द ईयर. पर यहां पर एक चीज देखिए, क्या यही प्रॉफिट, सॉरी, कि यही प्रॉफिट कंपनी ने ड्यूरिंग द ईयर कमाया है? प्रॉफिट ड्यूरिंग द ईयर, नो, प्रॉफिट कंपनी ने सिर्फ इतना ही नहीं कमाया है. देयर कुड बी some adjustment, some reservations, some reserve company has created to take care their future liabilities. तो कंपनी क्या करती है? कंपनी अपने प्रॉफिट में से कुछ पैसा रिजर्व रखती है to take care their future expenses or liability, like workman compensation reserve. अब ये वर्कमैन कंपनसेशन रिजर्व क्या होता है? अगर कोई एम्प्लॉय कंपनी में काम करते वक्त किसी एक्सीडेंट से हैंडीकैप्ड हो जाता है, सो कंपनी उसको कुछ कंपनसेट करती है। अब उस कंपनसेशन के लिए कंपनी शुरू से ही कुछ अमाउंट एज ए रिजर्व एक्यूमुलेट करना शुरू कर देती है। सेम वे कंपनी ने डिबेंचर इशू कर रहे हैं, अब एक डेट पे ही हैज़ टू रिडीम दोज डिबेंचर, सो कंपनी स्टार्ट creating reserve for debenture redemption reserve. Okay, there could be company can create or set aside some fund for general reserve. What are general reserve? In order to take care future projects for expansion, diversification, company do set aside some profit for future activities. They can be any other reserves or fund. Okay, apart from that, company keeps set aside some profit for dividend. So we look at what are these reserve or fund. This reserve or fund is the appropriation of the profit or distribution of the profit. There's a difference between provision and reserve. Provision is a charge against profit. वो प्रॉफिट एंड लॉस से चार्ज किया जाता है, उसमें से हटाया जाता है, जो फिर वो जो प्रॉफिट बचता है उसमें टैक्स पे करने के बाद हमारे पास नेट प्रॉफिट बचता है, विच वी डिस्ट्रीब्यूट टू टेक केयर ऑफ आवर फ्यूचर लायबिलिटी. So if we say that this is the only profit, if we look at this, if we say, is this the only profit? No. We have to add back all these reserves to know the total profit the company has earned during the year. तो रिजर्व एंड सरप्लस में कंपनी ने, और अगर क्वेश्चन में यहाँ पर कुछ रिजर्व दिए हुए हैं, लेट्स वर्कमैन कंपनसेशन, डिबेंचर रिडम्पशन रिजर्व, or it could be investment fluctuation reserve or general reserve. Then we need to see what's the change happened during this period in current year, previous year, and those changes will adjust and add back, and if there's a reduction we reduce it from the surplus profit to arrive at our number of profit. What is this profit? This is profit after tax. But what do we have to calculate? We have to calculate first net profit before tax. So we are doing a reverse calculation. So how this profit arrives? So there's a PBT. Just a sec. There's a profit before tax that is computed, and then provision for tax during the year is get adjusted, and then we get PAT. And this PAT, from this we make appropriation. We make appropriation about all these reserves. These are the examples. It could be more of it in the question, there could be less of it, but these are the reserves we create for our future liabilities or future expenses. For that, all these reserves are created. So what we have done from the question to reach at net profit before tax from what has been given in the question, we have to add back, add or less, all these mentioned here and mentioned here from our surplus profit given in the question. So that's the one part. Now come to the second part, which is extraordinary items. What are extraordinary items? Extraordinary items are abnormal expenses, losses, which or gain which company incur during the year. Let's say there's an example of preliminary expenses. So in our example where Ram Limited has started his business, to start his business he must have incurred some preliminary expenses. So those expenses are of a one-time nature. So these are called extraordinary items. There could be an example of loss of machinery due to fire. Now this is an extraordinary items. There could be some expenses Ram Limited has incurred for share issue, which we call share issue expenses, or we call, and there can be some underwriting commission. अंडरराइटिंग कमीशन क्या होती है कि कंपनी जब शेयर इशू करती है तो उसको सब्सक्रिप्शन या अनसब्सक्रिप्शन जो भी एक एडजस्टमेंट रहती है विद अंडरराइटर. अंडरराइटर एक एजेंट रहता है जिसमें वो कंफर्म करता है कि हाँ इतने शेयर्स के लिए सब्सक्राइब करेगा. एक कंफर्मेशन होती है जिसके लिए उसको कमीशन दी जाती है. सो ऑल दीज आर extraordinary items which are there. So we need to adjust all these extraordinary items from the profit, net profit before tax we have arrived. Now these adjustment will do. So we add back extraordinary item. Okay, add or less, we can say add back or less. Why? Because preliminary expenses, if I'll take example of preliminary expenses, we add first prelim expenses, and as prelim expenses, then as I mentioned over here, that after all these 4 points, anything extraordinary item which relate to number 5, operational activity, that gets adjusted. So prelim expenses thereafter get deducted from net profit before tax. Okay. Same way, what's the treatment of loss of machine due to fire? This does not involve any cash. So, and being an extraordinary items, we add, I just write down over here, I'm giving an example of now treatment of loss. So if there's a loss of machinery due to fire, we add in a net profit before tax. Okay, this is net profit before tax. We have arrived based on all these adjustments. And now we are making treatment of extraordinary items. So this gets add. And now let's say there is another extraordinary item which is insurance claim receipt on loss of machinery due to fire, right? So this loss of machinery is shown as an income in profit and loss account. Now, and as this relates to machinery, and machinery being investment, by the company. So this will be adjusted in investment account. So what we'll do to arrive at our net profit before tax and extraordinary item, will deduct this addition. So insurance claim received on loss of machinery due to fire, that will be get deducted to compute net profit before tax and extraordinary item. And this portion will be used under investing activities as money received. Okay, so that's the first point we have done. That is, we have computed net profit before tax and extraordinary items. Now come to the second part. So the second is non-cash item. क्या आपको पता है कि why we do this adjustment of non-cash items? अगर हम देखें what we are preparing cash flow statement. Okay, what we are preparing cash flow statement. So the item which is of non-cash related, this profit which now we have calculated, that is net profit before tax and extraordinary item, it includes so many non-cash items. So we have to adjust that to bring our profit into the cash term. So what are the non-cash items? The non-cash items are depreciation, we add that. There could be amortization, of goodwill, patents. There could be provision for doubtful debts. Okay. There could be writing off any liabilities or debt. Okay, so all these does not involve any cash. Like for depreciation, company has already bought machinery. Now, in order to charge that machinery over its life, a part of the total expense after residual value is charged from profit and loss account, that is called depreciation due to wear and tear. So that depreciation, there's no cash involved. Same way, company has purchased goodwill or incurred some expenses to buy the patent. Now that goodwill needs to be written off from the books, or patent has to be written off from the books. So company amortize over a period, a money from the profit and loss account. So that is also doesn't involve any cash. So provision for doubtful debt. These are the provision which we are making. There's no cash involved. Same way, you have created any liabilities. Now you do not need to pay the money to the vendor or for that liability. So you are writing it off. So once you are writing that off, it's provide a revenue, other income to the company. So all these three, if we look at, will be get added, and this will get deducted, because this is non-cash, so it will increase. All these three will increase the profit, not profit, the actual cash, because the profit, from the profit we have deducted depreciation, amortization, but they are not involving any cash. So to bring our profit into cash terms, we'll add those terms. And same way, we have increased our profit with writing of our debts or liabilities. So that has increased our profit, but in actually we have not received any cash. So we'll reduce it from profit to arrive at the profit in cash term. So the non-cash items adjustment is done to bring our profit, sorry, just a sec. This is done to bring net profit before tax and extraordinary items to cash terms. Now come, let's move to the third point, which is non-operating or non-operational items. As I mentioned in my earlier video, where I mentioned that there are three sort of activities company prepare their cash flow in. So activities which relate to or which do not relate to operational, that is been taken off from operational profit and transferred to the group which they belong to. Like, what are the non-operational items? There could be interest on debenture or bank loan, which we have debited to profit and loss account. So what we're gonna do, we're gonna add this in net profit before tax and extraordinary item. Let's say this is, now this cash items becomes A. So what we are doing now, we are doing adjustment with respect to non-operational items. So interest on debenture bank loan we'll add, and we'll deduct from where? We'll deduct from financing, we'll deduct from financing activities. I'll write it down, let's see, over here. Financing activities. And this will be adjusted from add in A. What is our A? That is net profit before tax, which we now converted after adjusting non-cash item into cash terms. Okay. Same way, there could be non-cash, non-operational items which can be in the profit and loss account related to, let's say, like I mentioned, loss on sale of machinery or any investment. Okay. First, this is also non-cash. So either you can adjust this item over here, or we can show it under operational activities, as this doesn't relate to operation, it relates to investing activities. So loss is added into our net profit before tax and extraordinary items, and then this amount will not get adjusted because there's no cash involved. So there's no adjustment in the investing activities. Or we'll say the amount that will be under investment activities will be cash received from sale of machinery. Okay, so non-operational activities get adjusted from net profit before tax, which has been converted into cash terms by adjusting non-cash items. Okay, let's move to our fourth point, which is change in working capital. It's nothing but current assets minus current liabilities. Increase in current assets mean decrease in cash. An increase in current liability means increase in cash. I explain you this with the help of an example. Let's say we talk about stock as current assets. So increase of stock can be spend more money, which is outflow of cash. You will buy, you'll spend money. Same way, increase in debtor. You have sold the goods on credit. On credit. Let's say closing balance in debtor is 1 lakh rupees and opening balance in debtor is 50,000. It means 50,000 increase in debtors. That means debtor has not paid this money which got blocked. So that is why I said increase in current asset results into decrease in cash. So we can say that the cash and current assets goes in inverse way. Increase in current asset, decrease cash, and decrease in current assets, increase cash. And if we look at now current liability, they go in the same way. Increase in current liability means increase in cash. So I give an example of this. Let's say, just a second. Let's say there's a creditors. Current year, or we can say closing balance, 5 lakh. Previous year, or we can say opening balance, 4 lakh. So what's the change in creditors during this year is increase in creditors by rupees 1 lakh. तो हम ये कह सकते हैं कि इतना अमाउंट जो हमने क्रेडिटर्स को देना था हमने पे नहीं किया. So we reserved our cash. So increase in cash sorry. So increase in current liability results in increase in cash, and increase in current asset results in decrease in cash. So current liabilities goes in the same way, the current liability in cash goes in the same way, increase in current liability, increase in cash, and in case of current asset, it goes in the reciprocal way, increase in current assets results in decrease in cash. So this is the adjustment we do with respect to change in working capital. Now let's move to our final point, that is adjustment for extraordinary item. It's simple, as I explained, that preliminary expenses which company has incurred, as I shown over here, just a sec. Over here, if you look at, so in this preliminary expenses, as it relates to this, color it differently. So preliminary expenses which relates to neither the investing or financing activity, so we adjusted from the operational activities. So earlier, to bring a profit, net profit before tax and extraordinary item, over here, we had add preliminary expenses over here. Just a sec, it's getting into different direction, I believe. So we had added preliminary expenses over here. Now in the end, we'll deduct preliminary expenses from here. The same way, the preliminary expenses which relates to insurance claim received on machinery, like I mentioned, that's related to investing activity. So what we have done, the loss on machinery has been adjusted over here. That has been added to bring the profit, net profit before tax and extraordinary item over here, the final. And this will get adjusted about investing activities, insurance claims we have received. Okay? So this is how the 5 types of categories I've explained to you to bring the profit or to a level from cash from operating activities. So clear? So let's repeat or summarize it for you. To bring or to compute cash from operating activities, what we do first, we bring our profit to net profit before tax and extraordinary items. First we calculate this portion, net profit before tax. And how do we do that? From the profit and loss account or from the balance sheet, the surplus which has been shown in the balance sheet, that get adjusted with respect to all the reserves over here and dividend, and then we adjust that provision for tax and deduct or adjust thereafter the tax paid. Actually, this is a provision for tax. Provision for tax is the current year provision for tax is added in the profit, and the payment of the previous year tax is get deducted while arriving the cash from operational activities. So once we do all this, thereafter, we deduct tax paid. So this will bring, or we can say 6 point, cash generated from operational activities. Okay. Okay. So first we calculate net profit before tax. We adjust all the reserve and tax from there, and thereafter we focus on the extraordinary items, and then to bring it to the cash terms we adjust non-cash items, and thereafter, as we have to categorize all the transactions into three heads, transactions which do not relate to operational activities, we do adjustment for that and transfer to their particular head. And thereafter the change in working capital, because this is an operational part. Our business is, that in the example I mentioned, sale of furniture. So the expenses we have incurred to buy raw materials and the stocks get built up of the furniture, and what we have sold to the customer, and the money we have to receive from the debtors, that all is related to operational activities. So that's why change in working capital adjustment we do. And in the last we do extraordinary items related to operational activities, like in the example I mentioned, that's related to preliminary expenses. Okay. So this is how we prepare cash from operational activities.
Hope you understand the five components well and now in a position to solve questions related to cash flow from operational activity. Still, if you have any doubt, any questions, any query, you can comment on that and I'll be happy to answer. I'll also request you to subscribe my channel and press the bell icon so that any future videos notification reach to you in time. Thank you. Take care. With you all, wish all the best to you for the exams which gonna be happen 31st March. Take care. Bye bye. See you.